Good afternoon. Good afternoon. It's 3:15 p.m. and I'm doing a market commentary from the moves that happened yesterday and today. So on XAU USD, we can see that the 6 p.m. Sunday candle exploded through the previous week's high, and that was our target for last week Friday. So how could we have gotten our setup, or how could we have caught a setup in this market environment? That's what I'm about to explain. So this is the 6 p.m., 7, 8, 9, 10, 11, 12. This is the 12 a.m. mark. That means this is the opening of Monday's original candle, you see. And then Monday's original candle came below this level. It came below this level. When you go on the 4-hour time frame, you see that it was a fair value gap dip. It was a dig into this fair value gap. So the fair value gap from here, I'll put that there back. I'll put that back there. Don't worry. Yes, this is the fair value gap that market dipped into before rising upward. So this was a valid reason to enter a landing session buy. And then apart from that, how could we have entered on the New York session? Because I know most of you don't wake up early. How we could have entered in the New York session is this. This candle has already pierced into the fair value gap over here, and then that swept sell side liquidity. It swept sell side liquidity over here. So it's safe to say we don't want to wait for price to do what, to come all the way down and then sweep this low. Myself, when I was monitoring the market, I was expecting price to come down to sweep this low, but I saw something that made me change my mind, and that's what I'm about to explain. So the market moved from 12 a.m., 3, 5, 6, 7, 7:30, 8:15, 8:30. This is what I want you to focus on. You see the lows, the sell side liquidity that was lying below these lows. This one, this one, this one, this one, this one got swept after the 8:30 a.m. That's when the New York session is coming alive. Do you understand? So it came below this low, swept this low, and then what happened? We saw price move back upwards. So we could have put our entry, we could have placed our entry here. We could have bought at the sweep of the old lows, or you can put our entry here, and that will be a buy stop entry. That means when price breaks above this high, then we enter the trade. Our stop loss will be somewhere here, and then we target 1:2. So this is where 1:2 will be, somewhere here. Or we can just measure 300 pips from the entry. Mostly my target is 300 pips, but due to current market conditions, I'm changing that because the market is delivering a lot of pips. So 300 pips will be here, and there will be downfall. That's the end of yesterday's trading day. So that's how you could have caught a price move. When you are monitoring the market next time, keep it in mind. If the underlying market condition is bullish, look to enter trades below old lows, or at the entry of a fair value gap, or at the entry of a bullish order block. That's an ideal entry for a bullish market. Now let's go to the daily time frame. Upon seeing the Monday market close at the high, I circled this fair value gap because I have an understanding that price will come back to the fair value gap to rebalance the markets. We can't continue to be in an overbought position throughout our stay in the market. Do you understand? Because the market is a place for equilibrium, sellers and buyers. Do you get it? So at some point, sellers too have to enter a buying market, and buyers too have to enter a selling market, just as you've seen over here. This was a extremely bearish market, but buyers entered. Do you understand? This also a bullish market, but look, sellers are entering. So I had this level marked out in hopes that, or in anticipation that price will come back and enter this level before going back up. And what happened? Before this candle opened, before this day's candle opened, I want you to, yes, take a look at this candle, this 6 p.m. candle. This candle swept the high of Monday's, the highest point of Monday. So it went above this high and then we traced back into the the price explosion. Sorry, the liquidity sweep. It went above this high, came back down, and then started delivering to sell side. Initially, my level was here. I marked this level that when price gets here, to bounce off. Because for price to come all the way to this fair value gap on a Tuesday, I wasn't really sure. You understand? Because Monday has already pasted an extremely bullish momentum. So I was not expecting Tuesday to come. I was expecting maybe Wednesday or Thursday. Do you get it? So it came here, bounced off of this level, and then rearranged itself over here. So over here, you can see a lot of consolidation. That's just market makers inputting more orders. Do you get it? So let's do this quickly. That's 6. Where is 12? This is 12 a.m. 12 a.m. The candles were coming down, 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 and it was consolidating. So seeing this, what do we, because we have an understanding that when price is bearish, landing session will still paste a bearish momentum or a bearish bias. Do you get it? But here's a case where it was consolidating. How was it consolidating? Because the Asian session has already done a lot of bearish movements. So the landing session will just paste a consolidation and then wait for the New York to deliver. And look at what happened. Let me clear these lines. Look at what happened. It came all the way down, but look at where it reached for. It reached for these old lows. Sell side liquidity, number one. Sell side liquidity, number two. And then it entered what classic traders will call a support zone. You see, so this is a support zone, but I call it a fair value gap because it's based on market price delivery. You get it? So let's go and look for where we could have entered as 15 minutes. So price was coming down from here, coming down from here, and then when it got here, it showed a drive to come down. It gave signs that it wants to come down because look at these bearish deliveries. They are steady and they have long bearish candles. Even when they had wicks, they still had a considerable amount of body to close. You get it? So it came down, came down, came down, and then look at what 8:30 did. Sorry, 8 o'clock did. 8 o'clock did a buy candle, and then after 8 o'clock, look what happened. We can enter here because let me go on the 5 minute time frame. Let me see. Yes, so because price was coming down, we could have entered over here. This is a small sweep on the old high, but I didn't want to enter into this because there's small time frame, and then I'm not trying to teach people how to trade on the small time frame yet. You get it? So this could have been an entry, but since we are not going on the small time frame, the higher time frame gave us a small bullish push, so we can enter on this candle and then wait for the price lower. Why? Because we already have an understanding that price wants to go low. You get it? So we put our entry here, over here, put the stop loss here, and then stretch our take profit to the tip of this fair value gap. And that's what a 1:2.35 risk to reward ratio. Even right now, we can enter a buy position over here. For those who have the eyes, when you go on the 5 minutes, you see what happened on the 5 minute. There was an order block mitigation. So put our stop loss here. This is the order block. Then we can put take profit here. So I'm sure this one will hit take profit, but I'll wait for it and then I'll keep you updated when it does. Also, Bitcoin hit our target for it before it started coming down. This was our target for Bitcoin before the week started. Then it went below it. It went below it with a considerable amount of pips. Let's look at silver too. Silver too is going up. And then GBP USD2 is repositioning itself to go up. Why do we believe so? Because there are lots of wicks here. Shows that price doesn't want to go low. You get it? Okay, thank you for your time, and then we'll meet another time. Bye.